Welcome back to Callistofx, and today I'll be going through part 2 of fair value gaps concepts in our ultimate supply and demand series. I'll be going through with you exactly how to apply fair value gaps in your trades and implement them into your strategy. Now, let's not waste any more time and let's get into the video. Alright, so just a quick recap on what fair value gaps are. Fair value gaps happen when there is an impulse move created from a manipulation of a high, basically an order block. Now, when you have an impulse move, what you normally tend to see is you have one very big candle. And how do you identify a fair value gap from there? Number one, always identify the impulse candle over here. So in this case, we have an impulse candle over here. You can see with a bearish impulse candle. In this impulse candle, what's the step number 2? Look towards the candle before the impulse candle. And it will be this particular red candle over here. And with that being said, you mark the low of that particular candle over here. You have the low, and now you mark step 3, the high of the third candle over here. This is where your fair value gap is. Alright, vice versa for the bullish example. So I'm gonna give you guys another example over here. Right, so this is the bearish example of a fair value gap. Now, if price is going upwards impulsively, right, where is the fair value gap formed? So over here we can see there is a retracement into the move towards the upside. And with the move towards the upside, you can see over here that there is a fair value gap from here to here. As I draw this, you can see that there is a gap between the first and the third candle of the impulse move up. And this is where we have our fair value gap as well for the bullish example. Draw it just like that. Fair value gap. There we go. So in the market, you can have many fair value gaps, right? As long as the market is moving bullishly or bearishly, impulsively as well, then we will have fair value gaps in the market. Now, I can draw as many as I can find right now. I'll show you guys right now what I see in the market in this particular chart. How many fair value gaps are there? Let's take a look. There's one here, there's one here, there's another one here, right? Impulsive move down, right? You have to identify the first candle, and then you identify the third candle. Once you've identified these two, then you have your bearish fair value gap, right? And let's find one more bullish example for you guys. You can see over here, there is a sell to buy, right? This sell to buy has created a bullish fair value gap over here, right? You highlight the first candle wick top, and then the third candle wick bottom, which is over here. And within these two lines is your bullish fair value gap. So there is going to be fair value gaps in every single chart that you see. It just depends on how big they are and how you identify them. So all these 4 boxes here are all fair value gaps, and they happen throughout the market, right? On all time frames, not just the higher time frame, the lower time frame as well. Now, how do you use fair value gaps to implement into your strategy so that you guys have higher probability win rate? In the next lesson, we'll be talking about order blocks and how you can complement fair value gaps with order blocks. Now, let's take a look at how this particular first fair value gap that I've drawn over here has reacted off. I pull it towards the right. You can see price has filled the fair value gap and come into a 4-hour level of order block, a manipulation in the market before going up, right? Over here. So this is exactly how I would use it personally. I would wait for a fair value gap to clear first. I'll wait for the fair value gap to break through, right? Collect all the orders first before continuing to look for entries around the newly formed order block that hasn't been mitigated. So in this case here, price came down, swiped through the fair value gap, right? Basically invalidating that fair value gap because all the orders there has been removed. All the orders there have been collected, right? And has potentially enough volume for the price to reverse. So in this case here, price has tapped into the 4-hour order block. Let me just label this nicely so that you guys can differentiate, right? This is the order block, and don't worry, I'll go through in depth on how to identify an order block in the next video. Now, let's take a look at this. Right now, price is currently ranging within this order block area. This is somewhat of a consolidation, and when you consolidate, what happens? Price can either go up or down at the end of the consolidation. But just based on this analysis right now, what I'm looking at is for price to continue going upwards. And why do I say that? Because this is an unmitigated order block on the 4-hour. So because of that, it is higher time frame. Number 2, when you have an impulse move towards the upside, right? if say this candle over here continues pumping towards the upside, we will potentially create a fair value gap. And this tells me that there is a good chance for us to see a retracement down into these areas here, maybe the 1.28266 level for a continuation bias upwards towards the upside. Right, so it looks something like this. Let me just draw the path. Right, so if, for example, if the candle breaks out like this bullishly, I want to see a retest of the fair value gap before continuing higher to fill the other potential fair value, all the other potential fair value gaps over there that hasn't been mitigated properly. So we have one here, we have one here. All these areas are areas where price can potentially target, right, when there is a change of direction in the market. So this is where I'll be looking to target, right, if I were to get into a long on GBP US dollar on the 4-hour time frame. Now see, if you were to go back and do some hindsight testing, right, back testing, you can see on the left, right, there is a bunch of bullish moves. But what happens when price starts to retrace downwards, right? The first fair value gap here gets taken out, right, over here. Let me just draw it out like that, taken out, one taken out. What's the next price point that they will target? The next fair value gap, which is here, right? Obviously, there are going to be fair value gaps within the candles itself, but as you can see, all these small little candles here, there is no fair value gap because each candle hasn't created a gap on its own. The only other place I see a fair value gap would be this very small area here, which already filled, right? It's super small. It's really minuscule. You can see over here on my screen, it is really minuscule, but that is still a gap, and it has filled with this major dump on the right. So with that being said, fair value gaps are being used. Fair value gaps are used most of the time to ensure price continues in a certain direction after filling. Right? So to target these areas is a high probability area for price to go to. So for example, for buys on GBP US dollars, I'm looking for continuation buys after testing the order block. And where do I target my take profit? At the areas where there are potential fair value gaps. So there are one over here and two over here. Now let me give you another example. So see if I were to go to perhaps maybe the gold chart, right? Gold creates a lot of fair value gaps because of the fact that it is super volatile. And when gold is super volatile, it tends to move up and down very, very fast, and that creates a lot of fair value gaps. Now let me show you, for example, over here on the 4-hour time frame. You can see after creating a bullish move towards the upside, it has left behind some fair value gaps, and let me highlight to you where I can find them. Right, these are areas where I can find the fair value gaps. Over here, this is one fair value gap, right, that has been mitigated. Right, you can see fair value gap 1. After a change of character, it came up to retest a bit and continued to fill the entire fair value gap over here. Right, where is the next fair value gap I see? I see another fair value gap here. Right, all the way from here to here. This is going to be a very, very big fair value gap. So personally for me, what I do potentially see gold doing is for price to continue downwards to around, say, the areas of 1940 to fill this fair value gap that was created in the past during a bullish move. So don't worry, as you notice, right, as price is going to come down into these areas, let me just draw a path. Right, as price is going to come down in this area, it might create a fair value gap within this area over here. Right, as price impulse downwards to fill the fair value gap, it will create a fair value gap while doing that. So there's going to be a fair value gap in the market, in and out, regardless of where you are in the market, which time frame you are. There is going to be a fair value gap. So therefore, you want to be using these areas to look for potential areas to enter or target as your take profit. Right, so it looks something like this. Then you come into the order block like that. Alright, so this is something that you guys can take note of, and just note that in summary, what I'm saying over here is that fair value gaps, number 1, they are created during impulse move. Number 2, you can use these areas as areas of take profit, and number 3, you can use these areas as areas for you to look for entries. So once price dips into the fair value gap, you can look for a potential shift towards the upside or downside, depending on which direction the market is. Right, there are going to be sitting orders within these areas for price to reject off. As you can see over here, there is, once price came into this area, it dipped up, came up. Right, this is one very, very big 4-hour doji candle on gold that dipped into the fair value gap first before going up higher. right? So this tells me that, okay, cool, once I dip into the fair value gap, I need to wait for a lower time frame confirmation to continue buying the pair. Now, as you can see, after it came up, it came down, right, to fill more of the fair value gap because it hasn't been completely filled. And after doing that, what did it do? It rejected again after collecting more orders, but sadly enough, not enough orders to push the market higher. And as it comes down, it created another fair value gap over here, right? Very small one over here, and then price broke through the fair value gap. And now where are we targeting? The next fair value gap, which is over here, as we have highlighted in the second purple box. And let me just make sure that it is marked out correctly here, fair value gap. There we go. Now, as you can see, this particular fair value gap, the bigger one that we have on the charts, hasn't been mitigated completely, hasn't been fulfilled completely. All the orders, there are still some orders at this area because the fair value gap has not been covered completely. So what do I potentially see? Like I mentioned, I'm looking for this move downwards, right? And when I have this move downwards, it is in line with structure, giving us bearish structure, creating lower highs and lower lows, right? So this is our lower high. Let me write it down. Lower high. And we have a lower low formed over here. There we go. And with this lower low formed over here, what we are seeing is that there is a break of structure. There is a break of structure over here, like that. And with this break of structure over here, we can tell that price is continuously going bearish on the 4-hour time frame. And with that, it's in alignment with the idea that we have that this fair value gap can potentially fill in the near future. Alright, so this basically sums up how I would use fair value gaps, right? So let me summarize it one more time. Number one, fair value gaps are created during moments of impulse, during the upside or during the downside, doesn't matter, right? Number two, we have fair value gaps that can be used as an area for potential entries, for longs or shorts, depending on where it is, right? And number three, we are looking for fair value gaps to look for potential take profit areas, because these are areas of potential rejections. So these are the three ways that you can essentially use, the two ways that you can use to implement this fair value gap into your system, into your strategy, right? The first one would be essentially how to identify them, right? Obviously, you see an impulse move, you have it already, and then you can look and narrow it down to one of these two methods of using it, right? Either to take profit or to look for an entry. All right, so this is the end of the fair value gap concept, summarized into two parts. First part was filmed a few days ago, and today we have part two. The next video that we have is going to be on order blocks, and I want every single one of you here to subscribe and turn on the bell notification to let us, so that you guys are notified as to when we upload the video. And if you like the content that we have been providing so far, and you like the new mask, the new setup, right, let us know as well down in the comment section below. If not, give us a like, share the video, and most importantly, subscribe. And I'll see you guys in the next one. Ciao.